here. Okay, so today I'm going to talk about the interest rate cuts since July 2019 and how would we react to the market. Okay, can as usual we must state these options, ideas, strategies are expressed by the speaker, is represented by the views of the speaker and not by tiger brokers. Okay, none of tiger brokers or affiliate is liable, and the advertisement is not reviewed by MAS. Okay, so we will see some of the effects on the interest rate of drop on your stock market. Okay, so these are the summary of what we will be going through. What are interest rates? Okay, usual. Uh, for this, I'm saying on the US side. Okay, so controlled by the Fed Reserve. Okay, so recent interest rate trends, market expectations of the interest rate cuts, which happened yesterday. Okay, so yesterday already cut by 25 points, right? 0.25%. Okay, so how interest rates affect borrowing costs, corporate earnings growth due to interest rates, which corporate will it affect, and effects on consumer spending, wealth effect. Okay. Okay, then we will be going to the next slide. Okay, so effects in drops. Okay, so what stocks will it affect actually? So it might affect consumer discretionary stocks, energy and commodity. Okay, volatility and rate cuts. Okay, long term growth. Okay, and impact on stocks, psychological effects and cuts and inflation. What will it happen? Okay, so other things that we have is Dow, S&P, what will it happen, and emerging markets. Then some of the inflationary linked assets. Okay, and we will go through some case studies on 2008, which is the the 10 years ago the rate cut, and the 2020 due to COVID. Okay, and long term versus short terms, and some final thoughts on rates cut. Okay, so what are interest rates? Interest rates represent the cost of borrowing money. Okay, so the Federal Reserve sets these rates. Okay, usually Powell will present the rates and why he does that. Okay, so that it can um let the general masses be prepared for what will happen. Okay, so before this rate cut, right, I checked from the internet showing the Fed. Okay, before the rate cut is 5.33. Just yesterday onwards is 5 minus 0.25 already lah, near a 5.0 something. Okay, so what do we mean by interest rate? Okay, usually it's always calculated by a year. Okay, so for example, we borrow $100, right? We would have to pay an interest of $5.33 per year. Okay, so so for this. Okay, so if we similarly, if we lend out $100, okay, like we buy some government bonds or we put some fixed D, we will also receive $5.33. Okay, so this is interest rates. Okay, it obviously benefits the savers. For example, those older folks, some of them have 1 million, 2 million. They put in the bank fixed deposit or some T-bills. They get 4%, 5%. 1 million will give them easily 40,000 of interest, which I think is quite good. That benefits them. They used to get lesser before all the rates hikes. Last time used to be about 1 or 2%, so they only get like 1 million. They only get like about 10,000, 20,000 maximum. Okay, so this box here, the chart actually shows us, right, shows us the interest rate. Okay, so you see 2016 was really low. Okay, it was a period of time where interest rate are low, then rise up a bit, then comes down again. Okay, the total, it was the COVID where the Fed adjusts for growth, for spending, so that the money still gets circulated. Okay, So why do the Fed control the interest rate? Okay, so Fed control monetary policy setting interest rate. Okay, to mainly to enable the economic stability. Okay, so they can manage inflation up and down and employment. Okay, can so for example, if there's recession or there's not enough jobs, okay, because the interest rate was high, so the Fed have to lower interest rate so that businesses will spend more. As businesses spend more, right, there will be more employment, okay, producing goods and products. Okay, so the Fed can namely do three things. Okay, so they can raise the interest rate, they can decrease the interest rate, or they leave it unchanged. Okay, usually when they leave the interest rate unchanged, right, that means the market is, or the economy is remaining the same good, so they will not change it much. Okay, but these few years a lot of turbulence, so interest rates go up and down as seen from the chart. Okay, can okay, so we will be going on to the next slide. Okay, while the next slide change. Okay, so Fed raises interest rate due to inflation. Okay, so the reason why Fed increased the interest rate, because there's a lot of concern on inflation. Okay, so some of the inflations are due to too much demand when there's a shortage of goods, as written here. Okay, can so as we can see, the inflation chart is actually inversely related to the interest. Okay, so one very easy example I give you is, okay, a loaf of bread is $3. Okay, will be increased to 3 to 4 years, right? $3 to $4 within 2 to 3 years if the interest rate is keep on going up like 7, 8, 9%. Okay, can so the but we know not only the loaf of bread increase due to there might be other supply issues. Okay, it might be other supply issues like due to war, the Ukraine and okay, so that the supply of this wheat is not sending over to other countries, so every country the bread price increase. Okay, so Fed usually increase the interest rate to lower the demand. If people need to pay more on, everybody would have a loan, like everybody have a house or have a car, they will borrow money to make the loan. Okay, so as the interest paid on loan is more, people have less to spend on goods, means less money to spend on goods means they have more money, they would have spent less and the demand for goods will decrease, leading to less inflation. Okay, so why is the interest so high now, is because the Fed increases to do this the last paragraph. Okay, they increase the interest rate. Okay, so this is the history of the inflation. Okay, so inflation low is good so that people do not have to keep on paying more. Okay, so next we will see why the Fed will lower the interest rate. Okay, so when the economy is lower, like the recent CPI, right? They say the CPI is already dropping. So the economy is not doing so well. Consumer price index and manufacturing index, all these are decreasing steadily, right? So Fed would have to decrease the interest rate so that uh the 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 companies will still want to spend, then making things cheaper, then the companies will still want to spend and employ more people, so that there won't be a so bad of a recession, or there won't be like if people do not have a job. Okay, so I wrote, borrowing become cheaper, stimulating business expansion and consumer spending. Okay, so people have less loan to pay, so they will have more money to spend. Okay, so as they have more spendable income, they will buy riskier assets, including stocks. Okay, and all that. Okay, so he already signal, actually he already did. Okay, yesterday it dropped. Okay, so that's why yesterday our all our indexes went up so much. Okay, went up about 2% for S&P, okay, 1% plus, okay. Okay, so effect on rate cut, okay. So yeah, so we already see the effect yesterday, okay. Our everything was green, right? Okay. So we will see the rate cut generally leading to a stock market rally. Okay, lower rates, reducing the cost of capital for business, increasing profitability, okay, driving the stock price higher. And if bonds offer a lower returns, right? Usually bonds bonds payout is pegged to the Fed interest rate. Okay, so as the bonds go returns go lower, people will shift more into equities. Okay, so our growth sector in technology, okay, and all the consumers will consumption stocks will also go up. Okay. Okay, detailed explanation on rate cut on the stock market. Okay, so like I say, in addition of boosting, so because every company is like individuals, we also have loan. Companies also have loan. Okay, so when companies have revenue, right? Okay, let's say they have 200, 300,000 of revenue. If they're paying a loan of, if they have 250,000 of revenue and they are paying a loan of 200,000, they only earn 50,000, okay, due to the high interest rate. Okay, but if the interest rate goes down, right? Okay, the loan they pay will be lower. The interest on the loan they pay will be lower. So that's why I say 250,000. Maybe the loan interest is only 50,000. So their earnings actually become 200,000. If the earnings of 50,000 to 200,000, actually the earnings actually times four, times a total of four, which is very, very good returns. Okay, can. Okay. However, all sectors are different. Some will be a lagger, some will be immediate. Okay, can. So so sometimes it's operated by news. Like I will say, today we will learn something more than stocks. We will learn like ETFs, like bond ETFs that are long term, like TLT ETF. Okay. Oh, so now I'm saying the TLT ETF. Okay. So so as the TLT ETF, right? When during the highest interest peak, okay, that means I'll say I want to increase interest, increase interest, increase interest, right? The price of the TLT go down really, 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 really low. Okay, was a quite a panic. Okay, actually, I started buying at $90, so it went down to $85. But in between, I bought a bit, but then I also do some funds on the long-term bonds also. So I actually wrote a bit of the profit lah. Okay, so as we can see from November the 1 year, right? Last year, October, it was the lowest of the lowest, okay? Because Powell said he's not going to stop increasing the interest, okay? So, but now, although the interest is still high, right? Okay, but due to Powell say he's slowly going to decrease the interest, right? So the market actually reacted faster based on news, okay? So this is not legal, this is the immediate news effect, okay? So somewhere in July or August, right, when Powell said there's a signaling of decreased interest, TLT actually already moved up by $5, then followed by $5. So we can see from July to September, or now it's October, it actually went up by 10%. This just blown, this TLT, okay. So this TLT went up by 10%. Okay. In addition, they have dividends monthly. Okay. So what is TLT? TLT it actually tracks like long-term US bonds. Okay. So there's a ETF, that means there's a manager, okay. There's a fund manager operating the T ETF, okay. So he actually buys long-term bonds, okay. So we see we see the rows of TLT, okay, from May to August is actually raised up by 10 over percent. $89 to $99 is 10%. So this case study highlights the inverse relationship between interest rate and bonds. As the rates fall, right, the bonds prices will go up. Okay, as the longer term bonds, right, because the longer term bonds already lock in the interest, right, so they are more attractive uh compared to the future current future shorter bonds. Okay, TLT performance is how interest rate can drive financial markets and financial instruments very quickly. Okay, for bonds, but also for stocks. We will elaborate further. Okay, can so what does TLT consist of? Okay, so next slide I will be showing you what is inside TLT and what are TLT interest. Okay, of course I'm not recommending people to buy TLT now, but some of my articles I got right about TLT when TLT was of a lower price. Okay, I believe I'm still investing in TLT, but the upside might be limited lah because the big growth time is already gone the $10 up. Okay, yeah, so okay, so we have all this, right? Okay, so TLT, what is inside TLT? Okay, their treasury bonds, all this. Okay, some of these bonds are fixed like 20 years plus. Okay, so they have a mix of the bonds. Okay, so that time the bond prices are really whack. The long term bonds prices are really whacked down a lot. Okay, due to people thinking the interest rate will keep on rising, so a lot of people shifted the 20 years bonds to the last years one, maybe 1 year, 2 year that they give like 4%, 5%. Okay. So TLT also, so since it's bonds, right? And it's a basket of bonds. That means the fund manager buy a lot of bonds, right? So they actually give dividend like per month. Okay. If it's like 0.3 based on current price of $100 is about 0.3%. Okay, translating to a total of about like 3% per year. Okay, 3.6% per year. Okay, so bonds versus stocks in the falling rate environment. Okay, so when interest rate falls, right, the long term bond prices rise. Okay, however, not only the long term bond prices. Okay, so it also affects the stock market. Okay, for okay, so we see a very significant inflow in 2024 due to of people buying TLT, so more demand on TLT though, so it pushed the price up by 10%. Okay, so simultaneously stocks also benefit from cheaper borrowing costs. Okay, so this one is another page where I wrote down. Okay, so you all can go and read the PowerPoint if I post it somewhere lah another day. Okay, or I will post it in one of the articles that I'm writing. Then you all can see and revise all the slides. Okay, maybe I will do it on a post. Okay, so the choice between the okay, so choice between risk stocks and bonds, right, depends on the investors' risk appetite, risk tolerance, or time horizon. Okay, so if, for instance, is if you're going to buy a house very soon, you have to pay for renovation, all that, right? So you have less risk tolerance. You might want to put your money in bonds as it moves slower. Okay, so then we see about stocks. Okay, so another case study, right, is the 2019 rate cuts. Okay, so at the end of 2019, right, the COVID time, okay, everything fall down a lot because people thinks that COVID, then the whole economy will stop moving because nobody dares to go out. Okay, then a lot of people will stop paying like insurance premium. Like my one of my favorite stock, like Manulife, right, actually came down from $20 down to like about $4 or $5 because people scared nobody is going to travel or nobody has the because the whole job economy stopped because COVID is like everybody must work for home, then no spending. Okay, so but what the Fed did was okay, they encourage people to do alternative spending and encourage alternative economy. Okay, so what they did was they print a lot of money, giving handouts, and also having a lot of rate cuts. Okay, so that time the interest was really low, right? Remember 0.3 something. Those people that lock in that interest during that time, they really really very benefited a lot. Okay, they benefited a lot on a lot of things. Okay, can okay. So okay, yeah. So you're okay. So later we will have questions on prices. Okay, can okay. So impact on growth stocks. Okay, so growth stocks benefits the most from falling interest rate. Okay, so some of the magnificent eights, you remember, right? Some of the magnificent eight actually move up by 2 times, 3 times, 10 times, 20 times. Okay, okay, during the sector. Okay, so for example 2024, right, the interest rate so during the time of interest rate cuts, yeah, so um when the interest rate cut, some of the companies that are in loan will go up a lot. Okay, but however, some of the like Apple's, okay, all that. Okay, but sometimes the company stock rise, right, is not due to interest rate only. They can be due to company's growth or projected growth. Okay, but Amazon is one of them and Apple was one of them that benefited for the interest rate rise lah. Okay, because they are consumer products, and when lower interest rate, okay, people have more money to spend, so they buy more Apple product or more Apple App Store stuff or Amazon. Okay, they actually order more. Okay, but funeral, but for interest rate fall, it will benefit with cheaper capital. Okay, so companies can expand more. Okay, so the earnings will even go up higher. Okay, like for example Amazon. Okay, and Nvidia. Okay, so but sometimes stock rise is not only on interest rate gains, drops due to the gains. Also, it can be due to the company having innovation. Okay, for example, like 2024, Nvidia and Microsoft show significant gains. Okay, due to their technology rise, and also interest rate drop also. Okay, so value stocks. Okay, but then now we go on to value stocks. Okay, value stocks, some of the value stocks actually borrowed money also. Can so if there's a interest rate lower, like just now I said, their interest, they pay lesser, so they will make more money. Okay, and all these are quite theoretical. Okay, okay, like some of the value stocks include like spending consumers. Okay, like Starbucks or Procter and Gamble. Okay, yeah, people have more money to spend, the company's earnings will increase for. Okay, so they okay, so some of this. Okay, so it's due to corporate borrowing. Borrowing becomes cheaper, then expansion can become more and more. Okay, so as the borrowing is cheaper, right? Then what the all those return on equity, invested capital, all that will be more attractive to investors. Okay, so and also we now we go on to some of the factors, some of the industry that is beneficial to this interest rate drops. Okay, such as real estates. Okay, can technology and utility. So real estates company, right? We have seen real estate company going up by a lot. Okay, like the REITs. Okay, because they're highly leveraged with loan. Okay, so when during the interest go up, right? They actually, some of the companies like Capital Mall. Okay, like company CICT, right? They actually from 220 drop down to 160, 170, but due to now the interest rate going down, they actually recovered to 220. Okay, so impact on consumer spending. Okay, So when rates decline, right, borrowing become cheaper for consumer. So consumer will spend more. Okay, they will spend more on homes, cars, durable goods. Okay, so for example, cars. Right, yesterday what happened to Tesla? Tesla went up from 210 suddenly to 225. Right, because now the interest is dropping. Okay, so the interest is dropping means that people buying cars will pay less interest. Okay, so and also maybe they give some discounts here and there on the interest rate. Okay, some the Tesla offer some of the countries lower interest rates. Okay, or even US they give lower interest rate lah. Okay, so lower interest rate leads to more consumer spending. So when consumers spend more on that particular company, right, they will earn more. Okay, the company will earn more, the revenue will go up. Okay, so okay, so they actually will increase the price of all this. Okay, so some of the other examples can be insurance. Okay, so insurance company also make more money. Okay, because in the past, right, they have some savings products. Okay, but when the TBS, the fixed deposit is higher than the savings products interest, um so there will be lesser people buying, so the revenue actually drop. Okay, but now the interest is going to the fixed interest on the saving accounts, all that going down. Okay, so more people will invest more, then some of the companies will go up. Okay, so some of the examples I also put is like when the interest rate is lower, people may want to see more renovations. Okay, so like interest is high, right? So for example, a normal household. Okay, so a normal household, I bought a, maybe I say I buy a house that's 1 million. My monthly repayment is when the interest is low, right? The time my monthly repayment maybe is 4,000, 5,000. But when the interest is high, my monthly repayment go up to 8, 9,000. Okay, so I will have like because I have to pay the money loan a lot, right? I wouldn't have the mood to renovate my house so much. Okay, so when the interest drops, I realize, oh, my monthly repayment is going to go down, go down, go down, right? So maybe I will do some home building, some renovations, then which will it will help companies like Home Depot selling all the renovation kits, all that. Okay, so these companies, the earnings will start to rise. Okay, so on the flip side, lower interest rate discourage savings, right? Such as savings account fixed. So sometimes they say that will lower it, okay? Lower it on some of the companies, okay? Yeah. Like sometimes I also see news of other investors what they do. Like you see what is Warren Buffett selling lately, huh? So that sometimes it will go back with the theory. So the housing market, okay, so the housing market is the most, that if lower rates, right, it will most likely leads to less defaults. Okay, so because now the home loans will be more affordable. Okay, and the ownership more affordable. Okay, so this will lead to home sales. Okay, so if some of the companies like Singapore one, we have Capital Land, or we have EIA, these companies will obviously make more and more money. Okay, then this will increase the sales. Okay, so as the sales increase, right, as it increase, then the earnings of these companies will increase. Okay, so also the REITs also becoming more attractive. Okay, so incoming producing REITs. Okay, so like some of the REITs, some of the REITs like iREITs, all that, they are actually doing they are actually borrowing money to rent out to others, because if they rent a lot of units, there's some economies of scales, they can rent it at cheaper, then they rent it to individuals at a lower price, right? So they rent it at a lower price, then they also make some profits, then it will be paying the share owners in terms of dividends. Okay, so rapid appreciation, price appreciation, however, there's some problems also can lead to bubbles. Okay, in the 2000, okay, housing bubbles. Okay, so lower rate can actually have a clear and immediate positive effect. So other things, another case study is post COVID economic recovery. Okay, so um we see the stock market actually recovered. The US stock market actually recovered very well. Okay, due to the falling interest rate. Okay, so US dropped the interest rate, right, during the COVID. Okay, so that time they stabilized the financial markets. Okay, and leading to the good economic growth in the economy and the stock market. Okay, so the lower the interest rate combined with stimulus package. Stimulus package is like handouts. Okay, so during the economy down, government actually hand out some cash to the people. Okay, because they take their, because a government actually tax everyone tax every one of the users. Okay, in, okay, so they of the people, then during bad times, that is when they give the handout over lah, to for them to cut through the place, then spending still maintain, then so the stock market was maintaining. Okay, in US. Okay, so now but if too much handout and too much rise in interest rate is also not good. Okay, um, so now what the Fed wanted to do, right, is they want to control the inflation, so the interest rate is staying high for quite a period of time. Okay, but because the inflation rate, right, have been showing downwards these few months. Okay, so downwards these few months already. So our interest rate, um the Fed will actually lower interest rate, like what happened yesterday. Okay, so falling interest rate, okay, boosts the economy and many sectors. Okay, so financial sector, however, face some challenge in the low environment. Okay, banks rely on difference in interest rate to charge on loans. Okay, so this is known as spread to generate a profit. Okay, so like for example, when now the US interest rate is 5 point something, right? So the banks usually they give their depositor 4%, then they will rent out to lend for companies or for individual to buy house at 5%. So for example, they lend out like $100, right? Okay, so they earn $5, but someone deposit $100, they pay out $4. So $5, $4, they earn $1, which is quite good. Okay, but if the interest is dropping to as low as maybe 1%, right? So they can't really charge the difference, the spread too much. Okay, so let's say if the interest now we drop to say 2%. Okay, so if the interest is 2%, right, the depositors, they may pay the depositors at about 150, 160, but they can only lend it out at 2%. So the difference is only a difference of 40 cents. So the bank's earnings, sometimes we will think that it will start to lower. Okay, so um as I say, I'm not giving advice to buy or sell banks, but I'm seeing like Warren Buffett is, due to this theory, right? Warren Buffett is starting to change some of his position from banks. He sold a bit. Okay, yeah. So mortgage lenders, okay. So some areas also benefits from interest rate. Okay, mortgage lenders, but if there is enough demand, right? So sometimes those companies lending mortgage to houses, they might benefit from the the interest rate also. Okay, so mortgage lenders that helps individuals to change the loan, right, structure, they might earn. Okay, like some of the company, some mortgage lenders that they actually go and ask those people to change their loan rates. Okay, they might earn more. Okay, so impact of small cap stocks. Okay, so usually, right, impacts of small cap stocks, right, they have a lot of loan. Okay, so smaller cap stock like emerging markets, they have a lot. They are more sensitive because they have more loans and lesser cash. Okay, like some companies like Google's have billions of dollars of cash, so they are not so affected. Okay, so some of the small cap like Russell 2000 have outperformed large cap indices. Okay, in some of the years during the falling. Okay, so so this is by theory. Okay, to for the rate cuts rose, right? Like last week I got say Sophie, right? Okay, like Sophie it actually fluctuates a lot lah due to the interest rate, so it goes down to as low as $6 plus. Okay, so due to the news that is going, the interest is going down, right? Sophie actually rises, right, from yesterday to today, 680 or 690 all the way up to 730. Okay, so how lower rates affect? Okay, so lower rates can have other global implications, not only on US market. Okay, so it will lead to other implications also. A weaker US dollar, a weaker dollar benefits emerging markets. Okay, so they actually reduce the cost of servicing debt. Okay, so because yeah, so because some company some countries also borrow money from US, so they due to the lower rate, they pay lesser money, so the whole economy will be better. Okay, so they also can boost the exports to this country. Okay, so historically, falling US interest rate has been capital inflows to emerging market. Okay, so sometimes the emerging markets might be better. Okay, so in 2019, when the cards emerging markets saw a lot of inflows. Okay, so in 2024, right, when the Federal Reserve signaled the rates cuts, right, countries like Brazil, South Africa all see potential gains. Okay, so the also lower cost from emerging markets borrowing from their main countries. Okay, so however there are still risks. Okay, lower interest rate might not be enough to offset the growth and stability of some markets. Okay, so we still need to measure and see the more detailed research by each. Okay, so when the prolonged low interest rate also have risks, right? Like just now I say one of the risks is due to inflation. Okay, so if the interest rate is too low, everybody have a lot of money, they will start to buy more and more things. Okay, like the US during 2008, right, the crisis, okay, is due to the bubble. Okay, can okay, so they also can hurt savers and retirees, okay, who rely on a lot on the interest rate. Okay, so savers and retirees, that's what I said at the start of the video, right? um so now is a very good time for all the retirees. Okay, like some of my relatives, older relatives, they have a few million, maybe they put in FD, they will get like 1 million, will give them 40,000 of interest. Okay, but if let's say if the interest drop down to 22%, it will be only 20,000 soon. Okay, but so lower interest rate can limit the central bank and ability to respond to future economic downturn. Okay, so every time when US have a bad economy, they will lower interest rate. But if the interest rate is very low already, there's nothing they can do. Okay, but at least now the interest rate is high. They can lower it to response. Okay, so stock market versus real economy, right? Okay, so sometimes we say the stock market is in ahead of the economy, like 8 months, 9 months ahead of the economy. Okay, so they do not say it immediate. Okay, so during the pandemic, the stock market actually have a shock. Okay, every time those when there's a shock that people think bad things, the more people will think bad things, say bad things, then the news articles will write worse thing. then the stock market will go boom, 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 very down. Okay, but when the it's so down already, right? Then the government will start to do things like lower interest rate. Okay, it's like giving a gleam of hope. Okay, like where you see the Lord of the Rings, right? Lord of the Rings when everything in doom and gloom, then the wizard come with a very bright light. Then everything is then the hope. Then there will be a better ending. Okay, every time this happens, okay. So now Fed had keep on signaling interest cut. So the economy is the stock market is actually good, although the interest is high, but the instruments such as TLT or the S&P 500, all that already started rising. Okay, yeah. So we see some of the charts I showed. Okay, so during 2019 to 2024, right, the interest cuts, okay, so the stock market actually improved. Okay, then there was COVID, that went down a bit, then it went up again when another round of easing started. Okay, so interest rate have cuts of Singapore REITs. Okay, so when the interest is highest, again Singapore REITs is lowest, but now it actually went back up. Okay, so as I said, maybe I will do another on next week. Okay, to see some of the more in depth. Okay, on those REITs and where do I find it. Okay, on those opportunities that we have due to this cut. Okay, so rate cut can be potentially leading to inflation. Okay, but now I don't think that's the case yet lah. Okay, can inflation already down. Okay, yeah. So all these are like, okay. So as we see, these few years gold actually went up now. Okay, these few months actually. Okay, it went up by $10 over. This is the gold ETF. IAU. Okay, so 2008 there was a cut. Okay, so there was cut and the price of S&P 500 goes up all the way. Okay, so revenue stock. Okay, so we also can see the annual revenue. Okay, so sometimes the if the company is good, they wouldn't be affected by so much by interest rate, but affected by their own revenue. As we see, Nvidia is keep on going up because they actually have good revenue lah, meeting estimates year by year. Okay, so it's not so affected by interest rate. Okay, so but effects can be different sector. So long-term stability also depend on the company itself, also other factors like inflation or economy go. Okay, so what I expressed today is on my own personal humble opinion, but not the views of Tiger Broker or the affiliates. Of course, we know every time we know stocks got rise, got up. Okay, I hope I'm not another Jim Cramer. Like last week, I talked about Sophie that's drop. Okay, so I hope but these are all mainly theory and where where the opportunities are coming and we have a better understanding, because better understanding we can have better decision making. Sometimes we have butter hands, right? So we must be careful. Okay. So now we come on to our Q&A. Okay. So the Q&A will be providing the soft toy price. Okay. So the soft toy price last week we know is a tiger bear, which is quite nice. Okay, Ken. Okay, so maybe I can I can do the video on where is the the bear. Okay, and I can show you all. Okay, some of the bears. Okay, that we will have for the prizes. Okay, okay. I believe it's this bear. Oh, that's my apologies. I didn't like. Okay, so yeah. So okay, so we will have some of the prizes, mainly the soft toy lah. Okay, like a bit like this tiger soft toy. Okay, which we can see on the screen now. Okay, but it's also a very nice one, a bit different, but it's still very nice. Okay, Ken. Okay, so now let me go back to the PowerPoint. So now is the time for Q&A, right? Okay, so for Q&A, I will have to see who win. Okay, so first question, okay? Okay, so now I'm at, back to the first question, okay? Okay, so what is the primary tool used by the Federal Reserve to influence the economy? Okay, so who answered first, right? Oh, so fast. Okay, so let me see who answered first. Okay, so the first one who answered is okay. Today we have four pushy. Okay, so the first who answer is Lawrence SG. Okay, can so I better write it down. Okay, so B. Okay, so the first one is Lawrence SG. Can oh, and also those prize winners please please report not report, please follow the what is the name called, um you all can ask the can telegram, okay, telegram, that telegram, or you all can message, okay, you all can message Tiger, okay, Tiger, that you won the prize, okay, can so okay, so you can message the organizer of Tiger for this event, okay, can uh I need to find her name a while, okay, yeah, so okay, so the first one, Lawrence actually won, okay, can okay, I will leave the message later at the end of it, I will say find who, okay, can okay, so next question, how to okay, wait, okay, so now I go to the next question, right, okay. Yes. So next question. How do lower interest rate typically affect the stock market? Okay. So A, they lead to a decrease. Okay. They lead to a decrease in stock prices due to higher borrowing costs. Okay. B, they make bonds more attractive. Okay. Oh, so fast. Okay. So the second question, Singapore day trader win. Okay, can okay. Second question, Singapore day trader win. When you lower interest rate will lead to higher stock market, okay, okay, can okay, so yes, now we are okay, so second person that win is Singapore day trader, okay, can okay, Singapore day trader actually won it, okay, y'all are very fast, even before I read the question, y'all already come out already, okay, can okay, so we have four prizes, okay. Next question. What do the performance does the performance of iShares 20-year bonds, TLT, from May to August 2024 illustrate? Okay. So okay, okay, let's see, okay. So the second one, right? Okay. So A, okay, who is this? Okay, the name is a bit weird. 5CF2 um 4C31 win. Okay, can so okay, so we still got some time, so we slower it down, okay, can so what does the performance of iShares 20 years, right? Okay, so the answer is C. Okay, so we do as we do the question Q&A, right? We also like talk some about the revision of what happened. Okay, so TLT, okay, we actually rose from 89 to $99. Okay, during this period. Okay, so okay, so later before the last question, we can look at how do we navigate, okay, on all this TLT, all this, okay, can okay, so let's see, okay, so I'm going to the Tiger app, okay, then so I'm going back to the Tiger app, okay, so in short, I also teach you how to navigate on the TLT, okay. So on some of the stocks that we do lah, okay, can. So the TLT you see today is also rising, right? Okay. So some of the search, every time we say if we buy something, right, wouldn't be it be good if we have a monthly dividend? Okay. So you see, actually TLT gives about $31 per month. Okay. So they give about 31 cents per month, right? So every month we got about 31 cents, means it's like $31. Okay. So $31 we can pay a handphone bill, or we can eat a simple set meal. Okay. So how do we see the past performance of all the dividends or that from the chart? Okay. So we see there are options, there's notes, there's analysis, there's profile, right? Okay. So this one, well, I'm going on to the next page where we see the profile or that, okay, of the TLT. Okay. So as you scroll down, you can see what is inside TLT. Okay. So the Tiger app is actually a very good app. Okay. For those seeing YouTube, okay, you can see how I navigate on the Tiger app. So when you are, of course, if you are not so sure, you can see our videos or some of our live broadcasts, right? We sometimes we show how we navigate. Okay. So as I go to profile and I scroll down to corporate action, right? I can see how the dividend is like. Okay. So this per share they will give you 31 cents. Okay. So which is pretty good. Okay. So let's say you have 100 shares of TLT, you will get $31. Okay. So sometimes because my name is option puppy, sometimes I buy the TLT or I buy certain stocks, right? Although I have dividends, but I sometimes I actually try to project what will be the maximum points. Then I will sell a call. So okay. So on top of the dividends, sometimes I also sell a call option. Okay. So which is also more than the dividend. Okay. So there are ways and tricks how to get like about more from stocks or from ETF like TLT. Okay, so for example, if I have 100 shares of TLT, not only I get the 30 over cents, right? I might sell a call option to get like additional. Okay, so if I want to keep a stock, I would sell the call option at 102. Okay, or 103, so that I don't get caught away. Then I still have dividends coming, or I have double of the dividend. Okay, can. But if it caught away, I will just gladly walk away with the $2 profit. Okay, can. Okay, so these are some of the ways we can do it. So we screen up, screen down. Okay, can. Okay, so sometimes we actually do that. Okay. Okay, so now let me go back to the last question. Okay, you are ready to see the last question, right? Okay. Okay, question four. What are the small caps that are generally more sensitive to interest rate that compared to the large cap? Okay, so who can answer? You all can try. Can. Okay, space rocket can yeah. As long as you're here, it's nice. Okay. So Lawrence, okay, so we have a few person answering already. Yes, so the answer is B. Can. Okay, so Alex Tan actually won. Okay. Alex Tan won. Okay. Okay, so some of the small caps are more dependent on di- dividend changes. Okay, Ken. So small cap stocks are okay. So I will also show you how, since got some time, right? We will see how small cap stocks affect Ken. Okay. So of course we have some big caps. Of course we have some small cap, and also although I'm in red because I always sell options. But you all can see my total portfolio is still in green. Okay, can. So some of my some of my amount actually, although you see like the below is red, right? But the total portfolio is still in green. Okay. Some of my ways of doing is that my stocks get caught away lah. Okay, can. So what are the small caps? Okay. So small caps is let's go to Sophie. Okay. Can so Sophie is something I'm just trying and playing so that I get okay, I get more trading experience also. Okay, so Sophie can be very volatile. Okay, can, but like what I say, stay the course. Don't have butter fingers. Sometimes. Okay, but of course it's from person to person. Okay, so um okay, so Sophie actually saw quite a drop. Can. Okay, let me say the minute one. Okay, the day one. Okay. So we can see Sophie, right? Okay. So Sophie, when they actually they went up to $8, as there's that time there's a more signaling of an interest drop. Okay. So it went up to $8. These are small caps company. So um when then after that they were waiting, maybe they are not so they thought that there won't be an interest drop. So Sophie actually got whacked down to very low as $6 plus. Okay, these are the small cap stocks which have more loans, so they are more reactive to the interest rate. Okay, but yesterday after the Fed announced the 0.25, okay, you see it went up by from the range from the lowest to the highest. Okay, from the lowest to the highest it actually changed by 40 cents. Okay, which is quite a lot now. Can. Okay. So okay, let me increase the face size as well. Okay, so we can see the face size increase a bit. Okay, so sometimes this is the lower cap stock. Okay, so how do I check the lower cap, right? Okay, I see the cap flow law. Okay, and the total cap. Okay, so the total cap is very important. Okay, so if the cap is too small, sometimes can be manipulated. Okay, so must okay, but this is considered a low cap. Okay, can. So they are more reliant on interest rate. Okay, so and the rest if like it's other type, right? It's like you see a bigger cap. Okay, so let's say we go to Prudential, right? Okay, Prudential got a bigger cap. That's now you see the value is um 1 million, right? Okay, 1 billion, right? This is 40 billion. Okay, I'm going to Prudential. Okay, 40 billion. Okay, so for 40 billion, the cap is bigger. So they actually less affected by the interest rate. Okay, can. So also to see some of the things that will be affected and not affected by interest rate, right? Can be things like earnings per share. Okay, current ratio. Current ratio means the amount of cash they have. Okay, can. So the current ratio is quite a lot. So it's they actually have a lot of cash. Okay. Okay. Or quick ratio, that means the ability for them. Insurance company usually they have a lot of cash with them. Okay. Yeah. So okay. So hope you all enjoys today's broadcast, right? Okay. So hope everybody learn a bit. Okay. So once again I must tell you all. Okay. So then because today I have four pushy, so I only four questions. Okay. Can. Yeah. So the four winners I will send to the relevant people. Okay. But if you're not sure who is it, you can actually okay, you all can actually contact Tiger. Okay. Yes, I will send to the um okay. These are the four winners of question one, two, three, four. Okay. Uh, yes. So this is only my strategy. Okay. Of course, I say as any strategy, right? Sometimes we win, sometimes we lose. Okay, so I'm not liable, but only my personal our personal opinions are okay. Can yeah. So this is the end of the presentation. Hope you all like it a lot. If you all like have more, you all let our tiger know, or you all can comment whether you all want to have more of this topic. Okay, but I think I'm preparing for maybe the next one. Okay, Ken. So hope everybody is profitable. Also, like space rocket say, okay. So okay, so I will just end the stream. Okay. Okay. So today I just end the stream. Okay. Thank you. Okay. So today we are okay. Hope you all enjoy the night. Have a rest. Then or read a bit of news. See what you want to buy lah. Okay. Bye bye.